Alright, welcome back to Wali's Financial 101. Yesterday we were talking about the different type of term policies. Today we're gonna go over all the different type of whole life policies. So hold on, let me get this camera situated first. Sorry guys, a new camera should be coming soon. But wait a great day to elevate. That's what I always say. Gotta get work in somehow. Like I like to do, we're gonna jump right into it. So when it comes to whole life, you got a variety of different types of whole life, just like you had a variety of different type of term policies. But we're gonna start off with the first type of whole life. This isn't like, it is no order, this is how I'm gonna start it off. So straight whole life. You wanna elaborate on what straight whole life is?
Just an original whole life. This whole life, basically, where you're making a certain payment, and then the goal is to grow that over time to then get a cash value, and then you get coverage of 100K or more, and then eventually when you want to change it to where you're now getting paid like a pension like income from your cash value, at that point now you're getting it straight for whole life. So you're getting payments sent out to you for your whole life based off of your cash value.
So with whole life, those are the type of life insurance accounts that have your money grow from 4 to 6%.
Correct. Yes.
Okay.
Majority of actual whole lives actually do that. Yeah.
Okay. So yeah, straight whole life, that's just your typical ordinary whole life. It does provide you that cash value, like he said. You get paid out of your cash value once it reaches a certain amount.
You will opt in to make that.
It's an option you can opt into.
Yeah.
Okay. So that's straight whole life. Next we have limited pay whole life. When we're talking about limited pay whole life, there are 3 different types of these. The first one is a single premium, which is basically instead of paying monthly premiums, you have one premium. Now, is this an annual one premium or just a one premium lump sum?
Yeah, one premium lump sum.
So single premiums, you're only making one payment and your whole coverage is covered. So next we have 20 pay life. Is that when it's broken up into 20 different payments?
Yeah, so you're just paying, let's say, for 20 years.
Annually?
Either annual or monthly.
Annually,
monthly, semi-quarterly, quarterly. Those are your 4 options.
Okay, so you're basically paying for a total of 20 years, though.
Correct.
And then your policy matures.
Yeah.
And then next up is life paid up 65. I'm not really familiar with that one.
Oh, just paying it all the way up to 65, and then that's when they have it as a pension-like income.
Okay, so that one you basically just paying, it's like a 401k without getting taxed.
Without getting taxed, yeah.
Pay, you turn 65, here's your retirement money.
Thanks.
All right. Next we have modified whole life, which is almost like, is this one almost like adjustable term?
Yeah.
So it's a similar to adjustable term, but you're dealing with whole life. So you have that cash value accumulation. Whenever you want to change your face amount, or even you want to change your monthly premiums, you have that ability to do when you obtain a modified whole life.
Correct.
And then we have graded whole life. I remember reading about that one, but you want to clarify on that one?
Graded whole life. It's like whole life that actually, I need to do research on that one. I ain't never heard of graded whole life. Let me see graded whole life. See, they got so much options.
You got
now.
so many options. You really got to dig, and that's what I like to come to this channel for, because there's so much information out there. Like, it's really hard to learn it on your own if you don't got ample amounts of time to just start bam, 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 bam. I read about graded whole life. I just never seen anybody obtain a graded whole life.
Oh. So basically, the death benefit is increasing. So it's increasing death benefit, basically.
Okay. So when you obtain a graded whole life, that's basically saying your death benefit is going to rise a little
like,
better.
So like at first, it'll start low so that you can be paying at a lower amount. But then your premiums you're paying are like higher than what you're paying for your insurance. And then gradually, as over the years, your death benefit will increase. And then when it increases, say if something happened, then that's when your family gets the death benefit.
Okay. And then, so that's graded whole life.
Yes.
So then we also have final expense whole life, which is basically just covering your funeral, your final expenses when you die. So funeral, medical bills.
Well, mainly just funeral.
Yeah, funeral.
Yeah, mainly just funeral.
And if there's any left over, that has to go towards medical bills.
Yeah, there you go.
But your funeral costs to get buried.
Yeah, for real.
It's like the lowest of the low whole lives.
It's like 20, 25.
That's like
not too much, not too crazy.
That's like you on your death door.
Yeah.
And you don't think you'll qualify for anything.
No facts.
Come get this final expense. You ain't gotta pay for your funeral.
Yeah, exactly.
I want to debate before I leave. All right, bye, love you.
Love you too.
Alex.
Bye.
See that? We work. Any and everywhere.
Yeah. That's facts.
You set the tone. Don't let the location set the tone for you.
It's
That's
that
a
easy.
quote. That's a quote right there. I'm gonna start giving y'all quotes on this channel. Watch.
For real, dead serious.
And then the last one I forgot to mention, group life insurance.
It's the
You
one
wanna do that one? You wanna do
people-
that one? Group life
This the
insurance.
one. This is one I really be liking to talk about because a lot of people believe that just because they have insurance within their company, that now they're going to be covered over that time. But guess what? If that company decided to lay you off, if they decided to say that you no longer work for us, they have the right to then say you're no longer covered. So basically all that group life insurance is the company has a face amount for a death benefit. Let's just say that face amount is $500,000. That's what they have for life insurance coverage. They base that $500,000 off of how many employees now work with that company. So at that point, they'll split it up into how many workers that they have. That 500,000, and then you have specific guidelines to have that insurance pay out if something were to happen to you. And they pretty much give like some of the craziest things in order for a death benefit to pay out of the company. Like I've heard things like you have to be in two. You have to literally be cut in half in order for I'm serious. You have to be cut in half before you can even get the
So when I die, somebody go cut me in half so I get this damn.
That's literally what they say, stuff like that, or it's just like very extreme like reasons of why. So when getting group life, it is good, obviously, because you will have it for your job. But if you don't see yourself working there for till you retire or till you die or something, then you should be having something outside of your group life insurance.
So also with group life, aren't you able to, as long as you work with that company forever, however long they state in the requirements,
yes,
once you pass that 3 or 4 mark,
yes,
if you want to leave, you can take control of your convert your policy to your own policy.
Now that is a benefit that group life insurance does provide, is that like he mentioned, you have to work at your job for a certain amount of time. So let's say 5 years. 5 years, once you pass that 5-year mark, you have the ability to now turn that group life into convertible whole life. So now you can convert your whole life into your own policy.
Without having to do the medical exam again.
Yeah, without the medical exam and all that, yeah.
Okay.
So that is the beauty of. That's the main benefit of group life. As long as you work at your job for a certain amount of time.
Yeah, because even also last thing I want to touch on is, in this whole process, the employees are basically certificate holders.
Yeah, pretty much.
And the employer are the contract holders. So like
Yes.
he said, they hold the face amount.
Yes.
And depending on how many employees there are, y'all get a certificate, you get a certificate, you get a certificate, you get a certificate. Here's your certificate. Now, if you work with me for 5 years, you can make it your own.
Oh, okay. Awesome. Literally that. Literally that. And that's the thing with why we recommend. We obviously don't tell somebody to do it, but we just recommend that you have insurance outside of your job, because your job can literally, there's actual possibilities where your job can switch the guidelines on your policy.
Okay.
So let's say that they mention now you're gonna get 50K. Well, now because of the death benefit lowering or more employees joining, they now dropped it to 25,000. They have that ability to do that.
And since we're on the subject of group life insurance, since whole life is a part of that, group life insurance can, and this is what you would want to check with your employer, because when they have group life insurance, that doesn't automatically mean it's going to be whole life. It can be term.
Yes.
It can be whole life. If you work for a great company, you can even get IULs.
Correct.
But it just depends on your company. So when, like you said, you do have that coverage with your company, you always want to double check what type of coverage that they are giving you.
What type? Exactly. 110.
And I think that sums up today.
You gotta do index.
That's what we forgot.
Yeah, index.
Whole index whole life. So basically, just like IULs, where you do not lose any money, but you gain that 12% plus, index whole life, you're not losing no money. You're marketing the market. So when you go up, you go up. As you drop down, you stay locked in. When it go back up, you go up. When it drop, you go locked in. So yeah, so I don't really know what much else to say about that, because if you know how IULs work, you kind of know how an index whole life work.
True.
Except there's probably, you just got less benefits than IUL does.
That's yeah, agreed. And then the thing too with the whole index whole life is that now that things evolved, because we never heard index whole life before. Well, what IULs do, they're uncapped now. So all they did with indexes is they just capped them. So that would just be like a difference. The fact that you get, and then on top of that,
whole life index is capped.
Yeah.
IUL index, you can get uncapped.
You can get uncapped.
So see?
So that would be like something that you would want to look into as well, because you get higher rates of returns. So although you have a capped index whole life, it's at 8%, where your normal whole life is a 2 to 4% rate of return. And then on losing years, and when the market is not doing good, then that's 0%. You hit a floor, or they'll have it in the index whole life, where the lowest you'll go is 2%. You know, because with fixed rate whole life, the lowest it can be is 2%, and then the highest it can be is 4%. So like stuff like that. So obviously we're not going into depth into these accounts because they have to have more explanation behind them.
Those what the Zooms are for.
That's what the Zooms are for. Yes,
so
that's when you
meet
sit
up down with
us.
you. We find out. We analyze what your financial needs are. We analyze what your situation is. We inform you about everything we can offer you, and then we sit down and discuss what it is that you want to pursue.
Exactly.
So it's hard. Yeah. So exactly, it's harder for us to go into detail because we have to match it with the client. You can't just spitball it.
And then companies are different.
Exactly. Each company is different.
We work with multiple companies,
so yeah, that's pretty much a sum of all the different type of whole life policies. Like I said, this financial world is always evolving, so whenever we get updates on new changes, be the first to hear about it. Thanks for tuning in. Check you next time.